Welcome to Beyond the SEAF model. This is effective for February 26th, 2024. I am Jack Kosar. Let's get started. Our SEAF signals for this week are technology, financials, and consumer discretionary. This is really effectively flipping the communication services that we had in our signals last week for technology. A couple key things to note here, and we'll highlight this a little bit better in the heat map and subsequently the rainbow charts. Technology is our number one for the trading week and then number one overall. This is majorly driven via the NVIDIA bump that we saw late last week. Net flows out of the market were actually negative for a majority of the week, and then post the NVIDIA call, we had a major inflow into the markets in general, but specifically into technology. This is not to say that the flow was exceptionally strong. It actually, for our top inflow for the week, it was actually relatively small, almost about a third of our normal or our typical inflow. So what does that tell us? That tells us it was much of the money that was coming in was definitely driven by NVIDIA, and money going into technology doesn't seem to have affected the entire sphere of technology, but really driven toward the top couple of capitalization stocks, and then subsequently, most specifically, NVIDIA. So this is really an NVIDIA raised drive. Energy coming in at two, kind of an interesting play here with a strategic quarter at 11, going down to 5 and 2. We're going to highlight that in the rainbow charts a little bit later as well. Um, Overall, what we were seeing earlier in this week was kind of money starting to move into more of the defensive sectors, and then that kind of immediately flipped over once the NVIDIA earnings came in. So, thing to note, we're not here to try to predict anything, go anything forward. We follow this model based on where the flows are going, and as of right now, flows are leading into technology, and flows are coming out of utilities. But as we were starting to see, and I'm going to move into my heat map, um, this is a real kind of big red flag for us when we start to see these things stop trending and start to see the colors start to jumble around the heat map. We know that there's some kind of internals that are moving around. Uh, the sectors are potentially reshuffling, and we started to see that. Like I said, net last week we were on major outflows coming out of the market prior to the NVIDIA earnings call. After the NVIDIA earnings call, we had a flip and a bunch of money came rushing back into the market. So that all that's to say is just to, be a little bit careful as we're going forward. Again, I'm not predicting anything, but just as we can see here, consumer discretionary communication services had a net outflow. Overall outflows were relatively weak. So we're really going to be looking for this upcoming week to confirm some of these trends. This will allow for us to kind of get a better picture of what's going uh, on the broader market. But as of right now, seeing some inconsistencies in the heat map that cause for some alarm. We're not clumping like I like to see when we are really trending in the right direction. Moving into technology. So, kind of going into what the rainbow charts are, this is actually a daily tracking of what the total ranking is for technology in our SEAF model. And the reason I want to see this is, as we can highlight this, is we can see here, we actually started to head into the avoid ranking for technology. Money was flowing pretty hard out of technology last week. It was actually not a C signal last week due to its weekly outflow of money coming in. And after this NVIDIA call, we spiked right back up into favored. So this thing was heading in the wrong direction, heading in the negative direction. We can also see that in the relative performance as it kind of started to uh, underperform versus SPY. NVIDIA hit. We had this nice little spike in relative performance that coalesced with a spike in the rankings. As you see, this is a bit of an abnormal situation as we tend to have a little bit of separation from the decline into a neutral and a void. And when it then kind of pops back up into favored, and these things tend to take a little bit longer, a week, 2 weeks, sometimes a month. And we can see this kind of broader trends of these relative underperformance versus SPY coincide with these lower markings in the rankings. That did not happen here, and we had that really tight reversal. Um, The reason I'm pairing these two together is utilities continues to be the most avoided ranking of our model. And as you can see, we started to kind of head in the positive direction here. We were still in the void ranking, had an immediate reversal. And the reason I bring this up is, as you can see here, this little spike in relative outperformance here kind of coincides with this relative underperformance. We were starting to get a little bit of positive slope on the relative performance versus SPY and utilities, and that immediately got shut down as the market continued to climb higher on the NVIDIA earnings. Moving now on to healthcare. Found healthcare a little bit interesting. Not a SEAF signal yet, nothing to do particularly yet, but we are starting to kind of climb up. We're staying a little bit more in this neutral ranking, touching favored at little points in time, and we're kind of headed in the right direction. This has coincided with, we had this little downtrend in relative performance, a little bit of a slightly positive sloped relative performance in healthcare. Um, this is a potential breakout if money continues to flow into healthcare. Again, I cannot predict the future, but this is the space to watch for next week. I want to see flows kind of come in a little bit stronger. We had relatively light flows individually on each sector this week, but healthcare starting to get itself out of this avoid into neutral and touching a little bit into favored. Aggressive managers or people that are looking to buy into healthcare space may want to take a little bit of a lead off here. Again, not a SEAF signal. We're not advocating buying, but just starting to see a positive trend in healthcare that is good to see after healthcare has taken somewhat of a relative performance beating over the last year. Lastly, on our rainbow charts for this week, wanted to just highlight consumer discretionary. We did see it drop off a little bit in the favored ranking. Still a SEAF signal for this week. The relative performance is a little bit slow. This, I think, has a lot to do with the relatively, while positive, actually in this case, negative inflows, but overall positive momentum in consumer discretionary, keeping it in the favored ranking. We are still, like I said, still seeing that positive sloping a bit slow in the relative performance, just kind of highlighting that these things, these travel. As we can see, this thing spent a bunch of time in the October, November of last year, stayed up in this positive ranking. We did get that positive slope in the relative outperformance. If we can maintain flows in consumer discretionary, we could see similar outperformance. Though to note that on the weekly chart, consumer discretionary was ranked eighth with a bit slight relative performance. That is all I have for you this week. I look forward to discussing the SEAF model a little bit more next week. And if you can, please give us some feedback. We want to make these videos applicable to what you are doing. And we would really appreciate any constructive criticism on these videos and how we could better make them to support what you're looking at. Thank you.